Cello Colax, and you are watching the Energy Market Outlook for the week starting 14th of April 2024. Last week was completely dominated by the tariff wars. It all started off with a tweet from an account that has been known for posting fake news, where the account holder said that Trump will hold tariffs for a 90-day period except for China. This was very swiftly disputed by the White House, but then later on the White House came out and said, you know what, actually we are holding off with the tariffs, and now the renegotiations continue. So this back and forth was the main driver of last week's price developments. Overall, European energy market moved down, but the move lower was anything but smooth. We did see big drops, gaps, followed by like small candles which show like tight trading ranges. So there wasn't a big consensus of there being a good solid bearish foundation from a fundamental perspective. Was just vibe trading essentially. Okay, so what will happen this week? With all the news, it can be difficult to keep up and especially to trade this. So we are looking at technical analysis mainly, which is what me and Clever Markets is doing. We are looking at the technical side of things to actually make trading decisions. All right, but as always, we have to start with a disclaimer. So everything you see here is just my opinion. This is of course not real trading advice. All right, okay, so let's zoom in. So this is what's published for my Clever Markets clients this morning on their dashboard. So the overview here is rather bearish with first indications of some neutrality on the hourly chart. So in short, essentially there is a potential for the market to bottom out early this week, so we could bounce, but in the grand scheme of things we are still most likely to continue lower. All right, I'll make myself very small here, and we are now going over to the TTF sentiment poll. Let me put myself into this corner here. So you can see that from one week to another, the bullish sentiment has increased dramatically. So this was from 2 weeks ago, and this is from this Monday. And you can see that the market is significantly more bullish week on week, and the bears have given up a significant percentage of their confidence, and we are now rather neutral, or some of the votes have gone bullish. So I think this makes sense, and I do agree with that. We are forming a base from where a minor up leg could be launched, but truly zooming out, I think that the bears could eventually continue. This is especially clear on the daily and hourly chart. Alright, so let's move on. Hey, before we move into the charts, how about a coffee in Athens or Amsterdam? Clever Markets is the official business partner of the X Energy Exchanges conference that takes place on the 8th of May in Athens, and the day before I'll be hosting a technical analysis masterclass. I will also be hosting a Clever Markets technical analysis masterclass on the 14th of May at the Flame conference in Amsterdam, so do check it out. There's also somewhere a link around here. Okay, cool. Now let's get back to the charts. Of course, we do start with a big overview. We have the TTF and NBP front month, TTF and NBP front season, EUAs, the German power, we have Henry Hub, and we have Brent. Let me show you the Brent market. There you go. So overall, the markets are still in this downtrend, right? So that is undisputed. If we just look at them in the greater energy complex, gas and power, it is all going down. So this is without a doubt, right? Now the only question is, when will we bounce? Because obviously the market is not going to go lower in just a straight line until we hit a bottom, right? So we are going to see the occasional bounce, as it is already visible on the EUAs at least a little bit. So I think this is where most of the bullish poll results are coming from. People are anticipating for this week that the market will bounce. I think that's nothing too crazy, but we still have to be very careful in identifying when the market will actually bounce, and that is what technical analysis is for. It gives us clear targets, trigger levels, validation and invalidation levels for all possible scenarios. As you can see here with Clever Markets, what I'm doing, I'm more scenario based, so you don't need me telling you that the market is bullish when it's going up and the market is bearish when it's going down. I think what makes technical analysis way more useful is if we attach it with real trading strategies, and that's what we're doing here. Okay, so let's stay on the TTF front month weekly chart for now, and overall you can see that we did break below the broadening wedge, which is in itself a strongly bearish signal. And you can see we did get our 2 consecutive closes below the broadening wedge, which is bearish. It happened on strong volume, and we can see that we got a bearish MACD crossover. So that means that the momentum is bearish now with a cross below the 0 line here, so strong bearish momentum. There's no indication of any sort of bullish bounce on the stochastic, and we see that just a couple of weeks ago we did get a bearish death cross, which is where we have a fast moving average that's going down, and it's going below a slower moving average that's also going down. So it's essentially showing that right now the market is even more bearish than it was previously, essentially. So this is the thing that we are starting the week with. So it's rather like a strongly bearish, firmly bearish outlook. Then we move on to the daily chart, and we are working with a couple of targets here. So one thing I definitely want to point your attention to is after this down move, we got this upside correction, which can now be continued. And you can see here the big target is 22.5. Yes, I understand right now we are at 32. There's like 10 euros in between. So I don't think that this is relevant right now. So please ignore it. I'm just pointing your attention to it because it exists. Okay, what seems a little bit more likely is this triangle target. And triangle targets are calculated with the height of the triangle, and this length is then applied to the breakout area, which gives us a target here at 30. So right now we are at roughly 32. I think moving towards 30 is nothing crazy. Yes, there is a potential for a bounce, but ultimately the triangle downside target can very likely be reached. This whole idea of like a bearish assessment would be wrong if we start pushing above 37. So you can see this level held twice, so the market is very reasonably confident about that. I am not so much. I don't like 37 is a good round number, and it is giving us a peak here, at least a little bit, but it's not the strongest trigger level out there. If the market would really push higher, we would probably start adding Fibonacci retracement levels. I'll just show you what that would look like in theory. We are not doing this now. I'm just showing you what it would look like. So if we really get a base here and we start getting our first bullish candle, then I would put on these Fibonacci retracement levels here. Right? Let me zoom in actually. There you go. The chart is getting very messy, so I do apologize. You can see the 0 is down here and the 100 is up here. So after the down leg, if we continue, if we correct higher, then we know that a shallow correction goes until like 36.58, deeper correction can go to 39, and the whole up leg would first be triggered with a move above 35.03, for example, right? I think it's a little bit too early, so I'm just taking this out. Now, let's have a look at the hourly chart. I like that way more. So here, by the way, this is a different extension. This is not that, yeah. But here we are also working with an Fibonacci extension. So after the down leg, we had an upside correction, and now we are asking, okay, how low can it go? And you can see that the 100 is here, 29, even lower than the 30 on the daily chart, right? And right now we are at a 61.8% Fib extension on the hourly chart at 32.69. And I kind of like this level because obviously the market is looking at that, right? Can you see we bounced very clearly off of it? So if the market is respecting this area, this means that a lot of traders are probably having their stops placed around that. So if we were to really push below the 32.69, then we could very easily go to the 29. Okay, so you can see my arrow is up. So the preferred case on the hourly chart is bullish, whereas the preferred case on the daily chart is bearish. So how does this fit together? Here, once again, this is the idea of the bounce, right? So if we start pushing above 35.19, which is this peak here, then we would have a more extensive correction higher. This could go to like 37, 38.62, right? But all of this is just counted as a corrective move in an underlying downtrend. if we remain below this peak here, 38.62, right? So in other words, yes, there's chance for a bounce, but as long as we top out below 38.62, the bears will still continue eventually. And here, this is what I talked about on the daily chart. This is the kind of base that might be forming, right? This idea of a bounce and downside continuation is wrong. If we also move below 32.69, then we just continue lower immediately. So I'm looking at the momentum here. We can see that the bearish momentum, right? We are still below still below the zero line, but we have pushed higher overall, the MACD. This is showing us that the bearish momentum is strongly declining. It's definitely not here anymore. You can see that neither the bulls nor the bears have the upper hand right now, with the DMI plus and the DMI minus, like the red and the green one, are moving lower. And we see that the ADX, the average directional index, is also below 20. So 20 is, where's 20? Oh no, wait, hold on. We are just at 20. Okay. So 20 is the turning point where we move above 20. We are in a trending market. So it's going up or down. And if the ADX is below 20, that means we're in a sideways trend. Here we see that the stochastic is making our first higher troughs. And we are moving higher. And we did get a bullish signal here. So overall, this here looks like a good base from where we can launch an up leg. And that is all for the TTF front month. Alright everyone, this is all for this week's Monday market outlook. I hope this will help you to identify trend reversals earlier. I hope it helps you to plan your trades and manage your risk more effectively. Until then, everyone, have a good week, see you around, and bye bye.